Our next speaker and our final trend talk before we get to the corporations is Dana Bezerra, Senior Vice President of the FB Heron Foundation, where Dana does a lot. You can read all about her in the app. Her bio is there, but very briefly, everything including investment syndication, grants, program-related investments, market-related mission investments, and a lot more. More importantly for us, though, at CECP and the Strategic Investor Initiative, Dana is on our advisory board, but she's also one of our funders and is someone we lean on for a lot of strategic advice. Many of you are in the room today because Dana called you, and we really thank you for that, Dana, and for all your support. Ladies and gentlemen, Dana Bezerra.
Thank you. Great. Actually, I didn't bring slides. I thought it would be more fun today just to take a quick little journey through one institutional impact investor's experience with all of this data and what we think about with corporations. As CECP noted, we're honored to be here. It is amazing having spent, I'm actually a farmer by background. That's my education. Grew up on a farm and spent many years in industry, and then took a very bizarre detour through Merrill Lynch that I'm happy to tell you about before ending up at Heron. And you get much smarter when you become a funder. That's one thing I've learned over the years. But at the Heron Foundation, we were founded in the early 1990s. And really, almost since our founding, our board had the experience of coming together for their biannual board meeting from all over the world and spending 3/4 of their time talking about the investment performance. And our then board chair had what was a seminal experience in Heron's founding. He literally was pounding the table and he said, "Really? 3/4 of our time has been about investment performance with not a word about mission or the change we seek to make in the world. Quote, shouldn't we be more than a private investment company that uses its excess cash flow for good?" That became a rally cry for Heron. And our board enthusiastically affirmed we should be more than just a private investment company. And they did what boards do best. They said, yes, this is a mandate we're going to take on. And they got on planes and went home. So, for the last 21 years, staff at the Heron Foundation, in partnership with our board, has been working on trying to figure out what does it mean to have a foundation whose mission is helping people and communities to help themselves out of poverty. What does it mean to invest our portfolio in accordance with our mission? When we began, we started really honestly, if I'm really honest, with small, bespoke, very, very expensive transactions that nobody would ever replicate. But they were clear that they were having an impact on our mission. We did that for many years, mostly through a tool, an IRS convention called program-related investing. And then we started with fixed income. What could we know about fixed income and its impact in our world? And subsequently, public equities. What could we know? We had done, I think, a pretty decent job of exposing those asset classes to our mission and figuring out how the two related when it came to financial performance. And we'd gotten to about 40% excuse me, of our corpus invested for mission. And then the world changed. The most recent financial crisis occurred. People and communities that we cared about, things were getting worse, not better. And so our board, along with our leadership in 2011, decided we were going to go all in for mission. That was very exciting. Another time that the board made this decision and we caught the ball. And so we decided, rather than continue to add individualized bespoke positions we could be proud of, we probably ought to start with what we owned. At this point, we were around 20 years old. We were an asset owner. We owned things. It's part of the nature of our business model. If I didn't say it before, we're a private foundation by legal structure. So we had a portfolio. And we, happy to say, pulled in a bunch of Bloomberg terminals and launched what we called PEP, the Portfolio Examination Project. And we decided we were going to go position by position and try to understand what was knowable about the impact of the things we owned. 4,000 positions later, I'm happy to tell you, we had a lot of learnings and some curious experiences along the way. In the beginning, when we sat down to look at the Bloomberg terminals, since we were a poverty-focused foundation, we thought we're open to what we find about impact, but given that we're interested in poverty, we think jobs, I'm being a little flip to tell the story quickly, we think jobs is a reasonable consideration and a path out of poverty. So we think having jobs, growing companies that would add jobs to our economy, this is probably good. So we started with one data point. Across being open to discovering the totality of the effect of an enterprise, we were interested in one common data point. We wanted to know about labor intensity. So we were looking at headcount per dollar of revenue. We thought these would be companies we would want to own. And we sort of hypothesized that from our foundation experience. And we did the research, and we looked, and some companies very, very quickly rose to the top. Private prisons. We owned a bunch of private prison operators. This was not a proud moment in the day of a foundation who professed to be an impact investor working on poverty alleviation. So I think we regrouped, literally in the conference room, some of us on the floor, having an existential moment about what does data add up to and how do we get better with our data experience. So our team literally went back to the drawing board and said, no more common data points. Let's just know what's knowable. So we would come in and everybody had positions assigned to them, and we would talk about what did we learn, what was knowable. And the conversation, as you might imagine, went, some had great environmental exposures and experiences, and some had terrible labor practices. And we had this practice of reporting out to one another. And in frustration, we started, again, we do a lot of table pounding apparently at Heron, but we started pounding the table and we would say to one another, great, love the data, but on net, do we want to own this? Tell me if we want to own this, given our position on the economy. And this on-net language stuck around, which developed into what we now call our net contribution framework. If I'm honest, to call it a framework is significantly overstating it. But it is a way of communicating inside our shop. We decided that all enterprises, and for us, we say enterprise because we have an investment portfolio that invests in business. We also invest in nonprofits. We invest in co-ops. And so for us, we talk about enterprise. Every enterprise we came across clearly consumed capital in the course of conducting its business, and it generated capital in the course of conducting its business. So we look at human capital, natural capital, civic or social capital, and financial capital, consumed and generated, and we ask the question, on net, do we want to own this company? Is it a net contributor to society's wherewithal, or is it a net detractor? And this became our loose framework for working together. So fast forward, the week before Christmas, we succeeded at rotating 100% of our portfolio for impact. A moment about humility. One of the things we learned on this journey was that you couldn't just isolate. I think part of us, naively, thought we could isolate data points and say, good companies on the left, bad companies on the right. And surprisingly, perhaps to no one, it's way more complicated than that. And so for us, I think really being able to use the framework to say, this position is not something we want to own, let's rotate to something we do want to own, we learned that getting from unexamined, and language matters, we called our conventional positions unexamined because we learned every single thing we owned was having an impact. Our industry, if I'm honest, has the arrogance to only talk about impact investing if we like the impact it's having. But what we learned is every investment has an impact. And we think as an investor, as an asset owner, it is our obligation to understand what impact we're having because we think we're complicit in as a provider of capital to those companies. We are complicit in their behavior. So for us, rotating the positions to impact is just that. We've gone from things we didn't know the impact to things we know a little bit more about their impact that we think we like. And our journey from here forward is to continually optimize our portfolio, yes, for financial performance like all investors do, but also for impact, that impact gets closer and closer to being good for the people and places and communities we're interested in. So for us, a couple of high-level learnings and some calls to action. Asset owners, know what you own. Just start there. Our industry has created this irrationally high bar for do you impact invest or do you not impact invest? And is it a carve out or is it your whole portfolio? Or is it with the program people or is it with it's ridiculousness, all of it. Everything we own has an impact. So if you're inclined to view the world in this way, asset owners, please know what your impact is. Start with what you own, just start there. Investors, there is still this discussion in our sector that you must trade off performance for impact. Please hear me clearly. I'm only sharing our experience. I cannot tell you, nor is it my way to, well, okay, maybe it's my way, but I won't tell you today that we're just going to throw down bold declarative statements. In our experience, we've been doing public equity the way we've been doing public equity, this net contribution lens, at this point for 16 years. We actually have an index that's 16 years old. It's outperformed the S&P on the 1, 3, 5, and on the long term, it's a first and second quartile performer. Information's on our website if you want it. In fixed income, our first mission-related account is more than 15 years old. It has outperformed the Barclays Agg for that entire time period since inception. Early days, but the attribution analysis is showing that the outperformance is being attributed to the underlying securities selection. That selection is informed by the things we learned through our philanthropy. So that's been our experience. The portfolio in total, since 1992, we, by the way, for those of you who don't know, and if you know, forgive me for telling you things you know, as a private foundation, we have a legal obligation to distribute a minimum of 5% charitable. We have met and exceeded that obligation every year. We take great pride in our grant making. Our portfolio since '92 has doubled and has delivered a 7.31 CAGR. All the information's on the website if you want it. This is not necessarily a trade-off you have to make. And lastly, for CEOs, please disclose, disclose, disclose. There are dozens of data companies who are scraping lots of crazy things about you and your performance and how you affect communities. If you don't disclose, you do not control your narrative. The markets are making decisions with the imperfect data they're collecting on you anyway. I would argue your cost of capital and arguably your valuations over time will reflect it. Control your narrative. Disclose what is material to the operations of your business. You don't have to respond to every bespoke and random inquiry you get, but please do disclose those things that are material to your business. And I think I'm out of time, but lastly, what I would say for CEOs is please do control your narrative. The long-term sustainability of your corporations and your performance is going to depend on the relationship with all of your stakeholders. Thank you.